let's move on now. In fact, let's stick to the telecom space and let's go to an ancillary unit. And we are speaking about earnings now. So Sterlite Technology has reported its numbers. Let's go through those numbers first. The revenue has shown an accretion on a year-on-year basis of 23%, EBITDA 26% higher, and the profitability has jumped 63%. We have the management of the company joining us. Anand, Agarwal, Director and CEO of the company, joins us now to decode those numbers. Good morning, Mr. Agarwal. Always good to have you on the show. Let's start off with your headline numbers. It seems to be an extremely solid print in terms of the operational profit as well as the bottom line. And also, if you can take us through your current order book. But let's start with the headline numbers.
Good morning, Pranoy. Thanks for having me. See, the headline numbers is a reflection of the growth that we are seeing in data that you were talking about in the previous section as well. So we're seeing this growth in data at a global level, which is translating into requirements for newer networks, newer 4G networks at a global level, which translates into the requirements for optical fibers and digital networks. And that's where we come in. And that's where our growth in terms of revenue, EBITDA, and profit after tax is coming. Our order book right now is at a healthy close to 2,700 crores. And year-on-year basis, our order book is almost grown by 60%. Around this time last year, we were at about 1,700 crores. Now it's 2,700 crores. And we are seeing a good sort of pipeline building up in terms of RFQ and requirements. And it's pretty global and it is pretty long-term.
Right. Let's also put a split in terms of your order book accretion. I understand 42% of this 2,674 crores, and by the way, it's also an increment of 300-400 crores from the previous quarter. So it's solid accretion there. 42% is for products and 56% is for services. And if you can take us through your revenue split as well, which is 76% for product and 22% for services. So do we make sense of this? I mean, in terms of products, there's greater accretion there, although as of now, this order book, a lesser share of that is attributed to products. Will that be a correct assessment?
Sure. Our services business essentially is a project business, which is of high volume orders and execution over a longer period of time. While product for us is something that keeps churning. So you're right, in terms of our order book, we'll always see a higher sort of concentration towards the services business. However, in terms of revenue, the product business is almost close to 3/4 of the revenues today.
Right. Sir, let's also go through your optic fiber, the volumes. Now, it's at around 6.8 million fiber kilometers compared to 6.1 million fiber kilometers in the second quarter. So sequentially, there has been an increase, and this compares to 5.4 million fiber kilometers in the year-ago quarter. I understand that your target is to expand to, I suppose, 30 million fiber kilometers. Can you take us through the trajectory of this, and what's the current capacity utilization?
Sure, Pranay. We had decided to move our capacity from 20 million kilometers last year to take it to 30 million kilometers by middle of FY18. And this is a brownfield expansion where we are spending 300 crores or so. At the current quarter run rate, we are already reached almost 27 million sort of capacity. So whatever we are adding up, we are almost using it instantaneously as we add up the capacity. And we are running at almost 100% capacity utilization. By the middle of this year, we should reach closer to 30 million, which is like 7.5 million kilometers per quarter. And we are well on our way to achieve that. The decisions that we have been taking in terms of capacity expansion over the last several years has been in accordance with the market growth that we see in future. And to that extent, a lot of our decisions are getting validated by the market growth that we see.
Right. In terms of the international revenue of your total revenues, it's at 39% in Q3. I mean, this is a little lower than the second quarter, but compared to the quarter one, which was 30%, this is higher by 9%. Is seasonality a part of this? And secondly, I suppose China is also a big factor in terms of accretion of this overall international revenue, as well as Europe. If you can take us through the geography-wise split, and also why the number seems to be a little lower sequentially.
Pranav, we actually do not plan for a certain export mix. If I see a 5-year picture, exports for us on a year-on-year basis would always be between 35 to 40%. And that's where essentially we see we are very strong at a global level, and we've been growing there. So if you see on a year-on-year basis, our export sales has increased by almost 70%. Domestic growth has also been increasing. So as a mix, we have been doing almost close to 2/3 domestic, 1/3 export. And that's more as an outcome rather than for us to plan in a certain manner. But you're right, we have maintained a very strong position in China. That's by virtue of us having Chinese operation into China. We believe optical fiber is one of the only electronic product that is actually exported out of India into China. We have a strong presence in Europe. We have a strong presence in Latin America as well. So we are in few markets, but in very focused ways, we establish a strong point of presence. And that will continue to be a strategy as we move forward as well.
Right, Mr. Agarwal, and before we let you go, a word on the debt as well as the capex. Now, I understand that your debt end of December was around 1,030, very marginal accretion compared to the previous quarter. Your capex planned till the end of, till March is 220, of which you've already spent 160 crore. And for the next year, it's close to 200 crores. Can I ask you, will this net debt number go up? And this new capex number will be funded by completely internal accruals, or a mix of debt and internal accruals?
Absolutely. The capex we have continued to fund essentially through our internal accruals only. So whatever we have spent 200 this year, whatever we intend to spend about 200 next year from the current expansion thought processes will all come from internal accruals. So our debt essentially is largely working capital debt, which would be just a function of the growth that we see. So any cash that we generate, part of it would go towards capital expansion, part of it would go towards shareholder dividends, and the rest would go towards debt reduction.
Fair point, Mr. Agarwal. We're going to leave it at that, but it's been a pleasure speaking to you, and thank you so much for taking us through your numbers and also giving us an outlook in terms of growth going ahead. Well, that's all the time we have on this edition of Trending Today. Thank you so much for watching.